What's going on, ladies and gentlemen? This is Tyler Trades, and in this video, I'm going to run you guys through my complete checklist of how I trade the index futures during AM and PM New York session using ICT concepts, specifically the 2022 mentorship model. Yes, this video is going to be a little bit of an ICT simplified video, but obviously you're going to do yourself a disservice if you don't go and watch the entire mentorship on ICT's YouTube channel. This is just the basics that I have pulled from that mentorship that I use every single day and that have helped me find actually consistency in the market to become a profitable trader after years of studying the markets, specifically smart money concepts, and having been able to put together an edge in the market. This is what I wanted to bring to you guys just as a foundation that you can then go and apply yourself. Hopefully you find this helpful. But again, as a reminder, just go and check that out when you have the time to do so you don't cheat yourself on all of the extra good stuff that is in there. But without further ado, let's get into it. So quick overview before we break down the charts is right here. So you guys can take a screenshot of this if you would like, but this is the overall trading checklist. The first one is basically just the time of day. Like I said, I trade the New York session, specifically AM and PM session, in increments. And there's different levels of liquidity that I will mark out and I will use depending on which session that I'm actually trading in, which we will get into that in the examples. But you want to mark out your liquidity levels that you're going to be looking to take trades and setups from. So you're going to mark out key liquidity levels such as previous session highs and lows, lunchtime highs and lows. And again, we will get into that, but you're marking out these key levels of liquidity. You're not just going to mark out any random high. You're not going to mark out any random low. You're going to mark out ones that have significance that are based around time and price. So that's number one. And then you're going to wait for one of these liquidity levels to get swept. And then from that point, you are going to wait for a market structure shift with displacement in the opposite direction. This is going to be your first indication that price is actually willing and ready to shift in the opposite direction of whatever the current market structure, whatever the current trend was at that time. That's your first clue that order flow is now shifting to then move the market in the opposite direction using that liquidity, right? So then from there, you want to see if there is a fair value gap that was created. You're going to look to enter inside of that fair value gap. Your stop loss is going to go above the high if you are getting short, and it's going to go below the low if you are getting long. And then 5 handle, take profit 1 on ES, the S&P 500. On NQ, if you're looking to compare, you're going to actually look for about 20 handles on NQ as opposed to 5 handles on ES, but that's going to be just take profit 1. You can manage your position however you would like for your trading plan. What I like to do is take one small partial if I can at take profit 1. I like to move my stop loss to break even and protect the trade, and then anything beyond that is kind of just a bonus. And I'm looking to target the opposing liquidity at usually 10 handles, 15 handles, 20 handles in some cases. It all just kind of depends on what the market looks like for that day and how much volatility we have. But overall, this is the full trading checklist. And at the end of this video, I'm going to give you guys a bonus tip on an actual time that you can focus on that is going to help you, in my opinion, increase your win rate, increase your probability, and actually prevent you from needing to stare at charts all day long. All right, guys, so in this video, I'm going to go back one day and we're going to use the previous day from the day of this recording to actually show you guys how you would implement this trading checklist for yourself. The day that I'm actually recording this video is Wednesday, July 26th, 2023. And this is FOMC statement release day. So we actually didn't trade this morning. We're looking to potentially trade later this afternoon. So what I'm going to do is we're going to go back one day. Today is Wednesday, so we are going to go back to Tuesday, and we're actually going to mark out when we would be looking to take a trade. Me personally, what I like to do is I'm in Central Time, and for this video, I will actually change this to New York time, so that way none of this gets confused or lost in translation with the different times. And I'm just going to go ahead and I'm going to mark out when I prefer to be trading, right? So what I do is 9:30 open is New York Stock Exchange open. That's opening bell. I prefer to not start trading until 30 minutes after market open. So I let that opening range play out, and I'm looking to take a trade after that has played out for AM session. And I'm really only looking to take my entries up until New York lunchtime. So once we get to New York lunchtime, which is noon Eastern, that's when I'm not looking to enter any new positions for the day. And then for PM session, I'm looking to start finding a trade after New York lunch hour. So once we get to 1 p.m., anytime after here is when I'm really starting to pay attention to the market, and I'm marking out lunchtime highs, lunchtime lows, and I'm looking to potentially use these levels for liquidity. And then I'm looking to be done trading by about 4 p.m. Eastern Standard Time. So as far as AM and PM sessions are concerned, here we have AM, here we have PM, and I'm only looking to take entries during these windows of time. I'm not looking to necessarily take new entries in the lunch hour. I'm not looking to take entries before, and I'm not looking to take entries once we get past, obviously, the end of the day. And I wanted to showcase yesterday's example for this video because obviously you're not going to get the perfect setup every single day on the ES, right? Sometimes the perfect setup might come on NASDAQ, right? It might come on NQ for this specific model. And for this day specifically, this is going to be a great example for you guys because I'm going to be able to show you how this actually played out and happened perfectly on AM session on NQ, but it didn't play out perfectly for AM session on ES. However, for the PM session, we did get pretty much a perfect setup for ES. So I'm going to be able to show you guys both of these. That's why I wanted to include this example specifically, so you can kind of get, yes, the setup and the checklist, but you can also kind of get a real perspective on sometimes it's not always going to be a perfect setup on only ES. So first and foremost, let's go ahead and get into this. So coming into the hour that I'm actually looking to trade, we're going to hop into bar replay mode here, and let's fast forward one candle and get right to that point in the day. So coming into the day, here's what we see. So we can see that right back here with this impulsive move down at New York Stock Exchange Open. This is New York Open right here, the 9:30 open candle. And what do we see has already taken place? So we see that right coming into New York Stock Exchange Open, that price had already come down and done what? It had swept all these levels of sell side liquidity, right? We swept that low, we swept this low, and then we also went ahead and swept this low. So all of these levels of sell side liquidity have now been taken out. These are London lows, these are Asia lows from previous day, and now we see price very aggressively here displace to the upside and actually creating our second confirmation on a higher time frame, which is the 15-minute market structure shift point right here. When we get price that actually comes up above this swing high, and it doesn't necessarily have to close, but in this example, you did get both. You got a candle that wicked past, and you've got a candle that closed on the other side of this market structure swing high. And we see that we have some displacement right down in here. Again, though, this is the 15-minute time frame, and I'm going to show you guys why this wasn't a perfect setup on ES, but it was on NQ at the same exact time. So I like to find my entries during AM session, preferably from the 1-minute time frame. Sometimes I have to get creative and I have to enter off of the 2 or the 3-minute, but anything above there I don't necessarily love to enter off of because it makes my stop loss need to be much bigger than I would prefer. So as you guys can see, scaling down here to the 1-minute time frame, right, I do not see any clear fair value gaps here on ES that I could actually use for my fair value gap entry. However, if I start coming up in my time frames, 2 minutes, still not anything here. 3-minute, we do have that fair value gap that was left behind here on the 3-minute, and then also on the 5-minute time frame, you guys can see really crystal clear that we've got that fair value gap left open. So what I would anticipate, and this is what I anticipated for this trade, was that we would get a retracement down into this fair value gap, and then once we got this entry from this fair value gap, I'm looking to take the entry, I'm looking to put my stop loss below the low, and I'm looking to target opposing liquidity, which is the form of relative equal highs right up here. As long as these are left intact, I would really like to take this entry to go long. So this is how I would frame up that trade. I would do 1 tick into the fair value gap. You can enter right at the beginning of the gap. I like to do just 1 tick because that's my way of confirming that we did actually mitigate that fair value gap by tapping into it. And I prefer to engineer my stop loss to be no more than 5 points. So as long as my stop loss is below 5 points, I do not need to refine to any smaller time frames. I am good with this. I will take this entry every single time. This is a 4-handle stop loss, even putting it 1 tick below the low. And then what I'm looking to do then is target opposing liquidity. So this would be a 10-handle move from entry to take profit. And then my take profit 1 would be exactly 5 handles, where I would look to remove risk, take a partial, and then let it ride from there. So my 5-handle TP1 would be right here. And all I would simply do is I would let this play out. I would let it come back, and in a perfect world, it would pick me up, and then it would go, obviously, hopefully, to our take profit levels. And we did not get the pullback. We did not get the pullback on AM session for ES. However, the same exact day, I will show you guys, we did get this pullback on NQ. So coming right here to the same time of day, we saw that NQ with New York Open, what did it do? Took out sell side liquidity, which was the London low from previous day. And then price, what did it do? Boom, shot up with displacement, market structure shifting above these highs. And then what did it do? It came all the way back to that same exact fair value gap, and it tapped into it. So the way that you would have done this, again, I like to do a tick or two into the gap. If you're on NQ, you could do 2 ticks, you could do 1 full point. It's really kind of up to you. And then this is where I would put my stop loss right below this low. And then same exact thing. I'm looking to target opposing liquidity, which at that moment in time would be this previous high right here. So that would be how I would do that. I would do a 20-handle TP1. So here our entry's at 605.5. So I would just do 625.5. Or what you could do, since this stop loss is actually almost 25 handles, you could do 25 handles TP1, which would be a solid 1-to-1, which is actually probably what I would do with this type of a setup. But you guys can see here how this setup played out on NQ, but it didn't play out on ES, unfortunately, for the AM session. But that's okay. Most days you're going to be able to get a perfect setup on ES from my experience, and you'll be just fine. But just for the people that like to, look at all the index futures, I wanted to include this example just because it's going to give you the reality of how trading is sometimes. And sometimes you're not going to get the perfect setup only on one currency pair, only on one asset. Sometimes you're going to need to, look between both of them. And this was a good example of that. So we obviously had missed this trade. The way that I manage my positions is once the take profit gets hit, once that opposing level of liquidity gets hit, I delete my pending order. I'm no longer interested in taking this position anymore, simply because this profit taking level, if there was another market structure shift to the downside with displacement, you'd have a whole new trade setup. You'd actually have a sell opportunity at hand if you wanted to participate in that. If that setup presented itself. In this case, it didn't. So here we fast forward to PM session. So let's go ahead, jump back into replay mode, and then let's go ahead and mark out where our lunchtime lows are and where our lunchtime highs are. So we can see that right here at 1 p.m., the end of lunch hour, that's actually our lunchtime high. So we're going to go ahead and mark that out. We're going to make that our lunchtime high right there. And then we also have our lunchtime lows, which are actually right at the beginning of the lunch hour as well. So first thing we're going to do is we're going to wait for one of these levels to get swept. Boom, there we go. We have lunchtime high getting taken out. At this point, I would like to drop down to slightly smaller time frames. Usually during PM session, what I have found is that I am okay sticking with the 2 and the 3 minute time frames a little bit more so, but every once in a while, you can still look at the 1 minute time frame as long as you have enough volatility in the market where the chart doesn't look ugly, for lack of a better term. Now at this point, all we are waiting for is a market structure shift with displacement in the opposite direction. We don't really have that yet, right? So all we're doing is just waiting. We're waiting, and if we don't get that, then we don't take a trade. Okay, so we see price now continuing to displace higher above the lunchtime highs. So at this point, there's no trade for me. If you were really aggressive as a trader, you could maybe look to enter from these fair value gaps to go higher. I don't trade that way. If I see a level get taken out, I'm looking to play the opposite direction, and I'll wait until that happens for me to actually find my setup. But this whole time I'm keeping in mind that we have, yes, taken the lunchtime highs, and at some point I'm expecting that we will begin to head for the lunchtime lows. Obviously not every single day will this happen, but most of the time during PM session you will see this setup play out. I'm going to drop down here to the 1 minute time frame, and we can actually begin looking for our market structure shift. So here we have what I would consider to be more of a dodgy market structure shift, only because we've pushed these highs, and to me this isn't really a concrete swing low. Okay, to me our actual swing low that formed was right here. It just happened. So the way that I would do this is I would wait. I would not enter off of this fair value gap. You could, it would be a little bit more risky, but you could do that. What I would like to do is let this structure form, which it did, and now I would wait for my actual market structure shift with displacement in order to find my trade. Boom, there you go. So now we've gotten a market structure shift below this swing low. There's our market structure shift. And at this point, I'm looking for a clear fair value gap that I can look to enter off of. And what I want to do, given that the price action does look like this, I don't mind looking up on a slightly higher time frame just to see how things look. And if things look a little bit cleaner on this time frame, then this is probably what I'll stick with. So let's fast forward one more candle, see if we got that fair value gap left behind there. Yes, we do. So let's go ahead and mark this out. So we've got a fair value gap right here. We do have a smaller one up here. And let's frame this trade up and let's see how this looks. So if I'm looking to enter right here, you could do one tick into the fair value gap if you would like. We'll do that for this example. Sometimes what I'll do though is I'll get that extra confluence with the structure and I'll put the entry right here. Right? So if we were to do this, either way, our stop loss, one tick above the high, is less than 5 handles. So I'm perfectly A-okay with that. And the same exact thing goes here. TP1, 5 handles. So we'll mark this out. TP1, 5 handles. And again, I'm looking to remove risk at least and maybe take a small partial as well. And then I'm looking to target opposing liquidity, which for PM session, for me, almost always is going to be those lunchtime lows in this example, right? If it was vice versa, I would be targeting lunchtime highs. Very simple, very straightforward. That would be about 11.5 handle run. And let's go ahead and play this out and let's see how this trade ends up working out. So we trigger in on the very next candle, price comes into that fair value gap. Like I said, you're entering either way, whether your entry is right at this structure point or whether it's right when it enters that fair value gap. Either way, it looks like you got picked up. Comes about a tick or so above that entry as well, and then we start to sell off. So there, TP1 is hit. At this point, I'm removing my risk and I'm going risk free, taking a partial if I so choose. Anything that happens from this point is honestly just a bonus, and that is it. So we'll keep playing this out, see how this goes. We pull back. Let's see if we get stopped out at break even. Gets close, but we do not get stopped out at break even, at least not yet. And then towards the end of the day, price sells off, and then we go and take out those lunchtime lows. And then you can actually see how price reacts here once this level of liquidity gets taken out. We come all the way back up. But at this point, all take profits have been hit and you're out of the trade. All right, now just for fun, I want to show you guys that same PM session setup on NQ. So again, I'm going to mark out the New York lunchtime highs and lows, and we can kind of frame this up the exact same way. So we have our lunchtime lows right here. I marked out the lunch hour between these two vertical lines. So here's our lunchtime low. And then we also have our lunchtime high, which is already being taken out right at the very end of the New York lunch hour. Now, because this setup is fresh in my mind, obviously you guys all know that we do top-down analysis here with Smart Money Concepts. So you actually do want to take into consideration these higher time frame levels of liquidity. Now, I'm giving it away as I jumped up to the 1 hour. So this is the high that was taken out as well right at the end of that New York lunch hour on NQ. That's why you saw ES move up slightly higher than the lunchtime high, and then you saw NQ work up a little bit higher than the lunchtime high as well, taking out this former high, which was the previous Friday AM session high of day, which is one of the main levels of liquidity that you're going to want to pay attention to going forward. So we'll jump back down here to the slightly smaller time frames, and this is that high right here, and watch what happens. So price does work a little bit higher than the lunchtime high, and then we finally take out that NQ high. Now from this point forward, we're simply waiting for that energetic displacement to the downside. Let's go ahead and drop this down in our time frames, And all we are doing here, guys, is we are waiting for market structure shift with displacement. We finally do get that energetic market structure shift with displacement. Once this low right here gets taken out, that is my market structure shift on the 1 minute time frame. So drawing this across, we'll label this as our market structure shift. And here we finally have that market structure shift. We have all sorts of fair value gaps lined up right inside of here, right below that market structure shift point. We don't really see anything up here on the 1 minute. On the 2 minute, there might be a very tiny one right there. But because the market structure shift point is right here, I would not mind taking this fair value gap entry, because if price comes back up here, all it really has to do is mitigate this gap. It doesn't necessarily need to mitigate this one. So what I would do is something like this. I would mark up this fair value gap. We're looking at the 2 minute time frame. I would mark up this gap, and I would plan to take my entry inside this gap, and I would have my stop loss above this high. So again, you can enter however you would like to do. It depends on how much of a risk tolerance you have. I'll be honest, my risk tolerance is not really all that high. So at most, what I would do is I would want to take the entry not at the beginning of the gap. I would like to tighten this up if I could, and I would prefer to get maybe consequent encroachment of this gap for my entry. So that's what I would do personally. That's 50% of this gap on this specific trade setup. My stop is above the high no matter what. And at that point, I'm looking to target opposing liquidity, which again, PM session, we're targeting lunchtime lows. So what do? Same exact thing. Let's play this out and we'll see if this does come back and pick us up. We tap into that gap, could have got an entry. If you're waiting for the 50% like me, you wouldn't have been triggered in yet, but you got triggered in right here. Price works up into that gap, also bounces off that market structure shift order block, and then we start to sell off from there. So what I would do again is do a 1-to-1 TP1, or you could just do simply this recent low as your take profit one on NQ. And then after you take out that low, boom, partial if you would like, remove your risk, trail your stop to break even, and now you're risk free. Anything that happens from this point is just a bonus. And then at the end of the day, boom, price really sold off on NQ, taking out those lunchtime lows that actually ended up selling all the way down to almost where you went long during AM session yesterday. So this is how you would use the model between NQ and ES for AM and PM sessions. But as I promised you guys, I do have one bonus tip that I believe is going to help you refine these entries and refine these setups even more. And that bonus tip is right here, and it's the macros in time. And I want you guys to take note of this, take a screenshot, and you can annotate this on your charts as you're starting to watch price play out during the New York sessions. But I want you guys to really focus on these macros. What you can expect to happen during these macros is that you will see price delivery to points of interest. So you'll see your levels of liquidity get swept usually during these macros. You'll see price deliver to these liquidity levels. You'll see price deliver to fair value gaps, but points of interest in the market, you'll see actually play out around these macros. So going off of New York time, you have 9:50 to 10:10 AM Eastern Standard Time for the New York session macro. You have another one, 10:50 to 11:10 AM Eastern. And then you have one right at the beginning of New York lunch. And then you have two 30-minute PM session macros that you can pay attention to. So right after New York lunch, you've got 1:10 to 1:40. And then you've got, at the end of the day, 3:15 to 3:45 PM Eastern. This is just a bonus tip for you guys to pay attention to. Note these macros and come back to this video and let me know how this back testing goes for you and how this works out for you in your forward testing as you see price play out during these specific time windows using this entry model for your trade setups. And then the last little tidbit for you guys that you should mark out and pay attention to as well when you're looking for your liquidity levels is these levels right here. This is what I look for. I don't really pay attention to the Asia range as much. Usually you'll see that the London range will take out the Asia range anyway. So it's usually irrelevant by the time AM session rolls around, but this is what I would mark out. I would mark out previous day London session highs and lows. I would mark out previous day New York session highs and lows, AM and PM. A little bonus, once you get into PM session, a lot of times you can play off of the AM session liquidity, so a little bonus there. And then you've got obviously the lunchtime highs and lows that you can look to get your setups from after these levels of liquidity get taken. I hope you guys enjoyed the video. I hope you guys got some value from this. If you did, please consider giving a like and a subscription, as it does help out the channel quite a bit. And please let me know, keep me updated on how using this strategy helps you out in your trading, focusing on the macros, how it helps you out in your trading. I would really love to get connected with as many of you as possible and would love to hear how this is helping you in your trading. And if you guys would like, feel free to drop some comments letting me know what type of content and what stuff you would like to see next. The main purpose of this channel is to help you guys, serve you guys, using the experience that I've gained over the past almost 6 years of trading. And in turn, it does help me really learn these strategies and learn these concepts even more, because you don't really learn something until you can teach it to somebody else. So that's all for now. Hope you guys enjoyed, and I'll see you guys in the next one. Peace out.